Inventory and supply of homes is increasing, demand is cooling, interest rates are dropping, and prices and competition may be cooling off in the real estate market. This is all coming up right now in this week's market update with your guy, Thomas Paulauskas. According to Lawrence Young, interest rates are likely to increase 3.3% by the end of this year and will average 3.6% going through 2022. With the coming changes in the market, Young expects prices to increase at a slower rate. But wait just a minute, because just before the weekend, we saw rates drop. As you can see in this graph from Freddie Mac, the average 30-year fixed rate mortgage is at 2.77%. Lower rates cause lower payments, but also have the tendency to increase home values and increase competition in the marketplace. House prices have increased 23.4% year over year, which is the second highest level ever recorded since January 1999, which is crazy! According to the National Association of Realtors, but keep in mind that month over month, we've seen trends starting to change and kind of flatten out. And with all this new inventory, Redfin announced home supply has increased, and that's ending the 5-month streak of record-setting home prices. So let's take a look at this graph by Redfin showing the housing price trends from each year starting in 2019. Now keep in mind, 2019 was a normal market and 2020 was completely abnormal and unique due to the unique circumstances of that year. So on this graph, as you can see, in a more normal market, which is represented by the gray line at the bottom for 2019, prices start to dip mid-July through October, then kind of level out through February the next year. And then prices start to climb again in March. So if we see a dip in prices through the end of this year, that would not be alarming in my opinion, and may mean that we're looking more at starting to follow the predictable trends in the market like they used to look. According to the Mortgage Bankers Association, mortgage applications have decreased and have been decreasing. Joel Kahn continues to say that potential buyers continue to be put off by extremely high prices and increased competition for buyers in the marketplace. Now, in the next few weeks, we'll see if these lower interest rates have a substantial effect on the marketplace for buyers. Nationally, a home is on the market for about an average of 37 days, which is less than half the time it took this same month a year ago. Inventory and forbearance inventory has been increasing for the last 4 months. In some areas, it has even doubled. While existing home sales have dropped from 4 out of the last 5 months. New development home sales have decreased as well for 3 months in a row. So they're building them, they're just not selling them as quickly. Here's a big indicator that market is starting to balance out. New listings is outpacing contracts signed. So again, we're hitting the market with new properties and we're not selling them as fast. The National Association of Realtors shows that contract signing, which basically means when an offer on a home is accepted, fell 7.4% from 1 year ago, while new listings rose by 2.8%. The graph shows that since April 2020, demand has outpaced supply until about the end of May and early June this year, which can be a sign of decreasing buyer demand. Overall, it is still a seller's market with very low inventory, and homes are still selling fairly quickly. Forbearance, evictions, and foreclosure moratoriums expire now September 30th, so there's been that minor extension. In the last year, about 25% of borrowers that are exiting the forbearance program have listed their homes for sale. With approximately 850,000 borrowers exiting the forbearance by October this year, that could be a possible 213,000 more units of inventory in roughly 2 months. Tons of inventory, which is actually quite significant if you consider there's anywhere between 620,000 to 680,000 homes currently on the market. If the 25% of forbearance exits hit the market in addition to what we're already projected to hit, the nation would still have historic low inventory levels, and it would be more in alignment with what we saw back in September 2020 with inventory going up a bit, which is now a significant boost in our inventory. So what's going to happen in the real estate market? What do you predict? Put your comments down below. Shoot me a DM. Let me know what you guys are thinking. Lastly, if you know anyone who's thinking of moving, buying, selling real estate anywhere in the nation, give me a call, send me a DM, send me a text, whatever, and I will get you in the right hands. Thanks guys for watching, and I'll see you on next week's Market Update.